Once the shutdown comes to an end, the question becomes what happens to the mortgage rates? The mortgage rates, they've been low. Mortgage rates we talk about all the time, they are predicated on good news versus bad news. Okay, good economic news is bad for mortgage rates. Bad economic news is good for mortgage rates. The mortgage rates right now have been low. They've been on par with like the lowest that we've seen in about 3 years. That's good news, right? Because the economy is slowing down, things like that. The problem is during the shutdown, a lot of the reports that we get for, what's going on with unemployment, inflation, things like that, a lot of those have either not come in or they haven't had the amount of data that the Fed would like to see, or like some of the players would like to see, things like that. Been kind of going without that data for a while. We've been kind of guessing on it. Mortgage rates have been dependent on those guesses. Once the government shutdown ends, we're going to get some serious reports. And depending on what they are, if they're good news, bad news, they're going to have a major knee-jerk reaction in mortgage rates. So sometimes mortgage rates react a little bit to stuff. I think the mortgage rate's going to react a whole lot to stuff. Okay, so if they come back and they say, well, unemployment really isn't as bad as everybody thinks it is, and inflation, staying high, things like that, I think that you're going to have a knee-jerk reaction of mortgage rates going back up into the mid-sixes. Could we get upper sixes? I don't know.